All right, guys. This is Jim and Seth with Ronin Defi. We've been somewhat consistent in our commitment. We're a day late on this one. We'll let that slide. There's a holiday coming. It's, spring, whatever.
Right.
But you guys are here because you want to know the key differences between crypto and stocks, or Bitcoin and stocks, or investing in cryptocurrency versus investing in stocks. And that's something I know Seth is really a lot more involved in than I am. Yeah, I'm more involved. Well, I shouldn't say more, but I dig into the DApps and the DAOs and the practical application of things. But I know Seth has wasted a lot more money figuring all this out. So I'm kind of going to let him run with this for a bit. But I think the first thing you need to understand if you're looking at getting into cryptocurrency as an investment, and we're not brokers, we're not even, well, he's smart, I'm dumb as a box of rocks, but you got to be careful. We're not giving you advice to do anything more than give you a little bit of our experience. We're not pros at this. If we were, we'd be on an island somewhere and would have done all this back in 2010. So we didn't do that. What we kind of did, and we bailed, but that's another story.
Yeah.
Seth, get us back on track here. Yes.
Okay, so for the key differences between crypto and stocks, you got regulation is a big one, and stocks are highly regulated, which makes them very less volatile. So they're a much safer investment. I think historically, the stock market is safe. You're gonna see pretty high returns over the long term. But I feel like right now we're kind of in this a lot of uncertainty in the market in general. So I don't really know where the safe place to hold your money is. That's why I think it's important to kind of make sure you're spread out, diversified.
Well, it's kind of hard to look at the past 2 years or so when it comes to crypto comparing to stocks, because if you were an early investor in Bitcoin and jumped on Ethereum, you got in for pennies.
Yeah.
And Bitcoin capped out around $64,000. So if you got in way early, even mediocre somewhere in the middle, let's say you just got in at 1,000, you still 60 extra behind.
Yeah.
So, it is but that's part of that Wild West mentality of crypto, which is probably going to change. But
yeah,
I know you've got
yeah, so that kind of goes in with the volatility. So the volatility of crypto versus stocks is where, why you have such bigger gains like in Bitcoin, like what you were talking about. So you don't see the 100x's or even the 1000x's that are possible in crypto. You don't see that in the stock market. At least I haven't. I don't know. I'm sure there was back in the day, but
you kind of have to. It's interesting if you look at investing in the stock market 15, 20, say 20, 25 years ago. That was the .com bubble that really is very similar to what I think the crypto market kind of just went through.
Yeah,
where everyone kind of got a taste of it. They didn't understand it, but they knew there was money to be made. If you threw a few bucks at it, you might take $10 and turn it into $150.
Yeah.
Things like Home Depot, that traded way early. QVC, the home shopping network, you could get that for a couple bucks, and it wound up 10x and 20x and really quick.
Yeah.
And those were just traditional stocks that were benefiting from software technology and those types of things. That's very similar to kind of what just happened. I think things do settle down. That volatility still is going to be there because we're going to shake out a lot of people trying to create dApps and DeFi networks and other types of opportunities, and it's going to be the best business minds win at that point.
Yeah. That's the thing is it's very similar to that bubble back in the early 2000s. So it seems like we're kind of going into these like mini bubbles, like
much faster.
Much faster. Everything moves. They say like crypto moves like 5 times faster than the real world. And then in NFTs move even faster than that. But back to the volatility. So like that's why you have, that's why I love crypto so much, is because, that's one of the big pros is you have the potential to make a lot of money in a very short period of time. And I think, 500 or 1,000 X's are like what you want and what everybody wants. Those are hard to get. I've never gotten one of those. I wouldn't be here probably if I did. But I've definitely had like multiple 10, 15 X's. And I think those are very relatively easy achieved. You just have to kind of look for those small cap coins and
act fast.
Act fast, yeah. You just find the right teams, and
I know I jumped on Doge when it
Doge is a perfect example.
Was a very short window of opportunity. I jumped in at 5 cents, or actually 4 cents, and then dropped it in the upper 60s and 70s. Bought it back at 50 and dumped it one more time, and that was just pure luck. You gotta really have a short, I won't say attention span, but a short game plan with those things.
Oh yeah,
too married to it. Don't
Absolutely.
I don't see another Bitcoin opportunity coming in terms of buying something for $1 and turning it out at $60,000.
Yeah,
I don't see that happening. So you really have to. That volatility is also. How many X? How fast does it move? I think when those meme coins hit and there's a lot of push behind it, you got to really pay attention.
Yeah.
What happens before lunch could change after lunch.
Absolutely. Like people fall in love with these coins and these projects, and they just hold. It's like one of the big things is the hodl mentality, which I think is okay for Bitcoin and even Ethereum, but like for the rest of these things, I mean, don't get married to it.
If it's a bull market and it's not right now, you're riding a bull. That's an 8-second ride. You're gonna fall off and get back on if you really want to be a pro bull rider. So
yeah,
it's not.
I mean, look what happened to Luna, and even FTX. Like, people lost all their money, just all tied up in that because they just held on.
Yeah. Being volatile is an understatement. At times.
Yeah.
Once again, we talked about this one of our last shows. Do your research. You have to know who's running these companies. Don't just buy a coin just because it's hot. Why is it hot? They can pump these things and dump them. They can, there's rug pulls out there. There's all sorts of things out there that can bite you if you don't do your homework. Doesn't mean you can't day trade a little bit and kind of ride the lightning, but if you're going to hold on to something, you better do your homework and know who these companies are.
Yeah. I think like you want to be in that 3 to 6 month window as far as like holding. And that's where the key difference between the cryptos and stocks is. Stocks, you could buy a company and you could hold on to it for 5-10 years and be good. And that's ideally what you want to be doing.
That's right? One of the big differences is, you've got some history behind the stock market where you can look at, hey, I can buy GE and know I'm going to get a dividend fairly regular reliability scale. And I can count on that not fluctuating a whole lot. But even some of the ones that do fluctuate a lot, like Ford and GM, they're still going to be, there's still some safety in that kind of thing. The energy stocks are somewhat predictable in terms of their ebbs and flows. But with crypto, you're talking a long hold is 3 to 5 months because if something's going to change in that time frame, it's going to be because that is actually advancing whatever tech they're trying to push, whatever DApp, whatever network that they're building. You're going to see something move, and it doesn't mean it always has to be 3 to 5 months. But that's if you're not seeing a big swing in that time frame, might want to look somewhere else. Is that what you're saying?
Yeah. I mean, you can tell like when you're looking at projects, like what news they have coming up, because that's what moves the market is the news. When is their mainnet launching? What kind of big news launches they have coming up, and that's what you want to look at. And another key difference is the liquidity. So when you're investing in these things, a lot of the times you can get into a situation where you buy, especially if you're short-term trading for these small cap coins, especially, you can buy these coins. And then when you're ready to sell them, there's just not the liquidity in the market where you can't sell. There's no buyers to fill your order. So, that's one thing to look at when you're trading these small cap coins. You got to be very careful.
And if people are dumping it, it's like, right before the World Series, they print both teams World Championship T-shirts. You don't want to be the guy holding the losing team's World Championship T-shirt, because that's going to get shipped off to some third world country to be given away and written off. It's you do have to look at, hey, if I do want to sell this, is it a good enough network that I'm on to be able to sell it, to put it out there where there's enough buyers, or simply do enough people want to buy it when it's time to sell. Because if people dump it, if it's a big pile of poo-poo, everyone's going to be dumping it.
Oh yeah.
No one's buying a burn and build. That's just not going to happen. So and there's things that you said, Bitcoin, you're safe there. Ethereum, Dogecoin, the meme coins that kind of fall just below the Ethereum thing in popularity in terms of pop culture. I think there's enough behind them to keep them going, and they took that money and they're moving forward and they're making something of it. But once you get off those charts, if it's a matrix coin, if
it could go to zero real quick. You never know.
So liquidity is a big deal. You don't want to just donate. It is an investment. And then ownership, because you're not necessarily with a stock, you own part of that company. Now, a coin, you own the coin that represents the value, the market value of that company. If other people wanted to exchange that coin with you for Ethereum or Bitcoin, that's where the value comes in. But you don't technically own it unless you're into a DAO, which you're more not even owning it. Then you're more of a board member, I guess, that's benefiting. I don't know. I mean, this is a kind of a tricky one, because there's some ownership, like these governance tokens. You even have. I mean, I would say some of them have, not all of them have governance tokens that you can actually use your tokens as a governance tool. So where you can vote on, where the protocol goes. And I think some of the big ones are kind of like starting to go that route. The DAOs that I've helped structure for other companies, they all have kind of like that first round investor coin, which represents more of an ownership. Usually they're staked. So you're in it for a set amount of time, but you're getting more benefit for being staked. Then there's a second round that still has a lot more voting opportunity, proposal opportunity, and then you generally filter it down to another round of coins that's a little more what people that would buy and sell. And we use that to kind of both of those tiers you can get in and out of at a penalty, and you just keep filling the pool of crypto flow in and out of the organization to help it take the next step, have some return for the original stakeholders, those types of things. So, the governance coins kind of do make you feel like you're owning something, but in the end, you're really not. You're just owning that token. Is that right?
Well, I guess you get control. As far as like you get a say, which is kind of similar to owning a share, of a company. So a lot of times they'll send you packets on what they're voting on. So I mean, there is that aspect of it.
But you're buying in at a different level, as opposed to like not all stocks give you a dividend, whereas a higher token, first round token, gives you more or less a dividend. That's one of the big differences, especially if you're new to buying, knowing what you're buying. Now, at that point, if you're buying into a DAO and those types of tokens, you're getting involved at a different level than just buying Bitcoin and holding on to it, waiting for the next bump in the market.
You're a little more invested.
Would you say there's a lot of difference in how you can invest then? Whereas you go into the stock market, you're buying this stock, that stock, and that's kind of cut and dry. That's where you're at, unless you're a big, you're throwing tons of money around. As opposed to where you can get into crypto, you have a lot more options in how involved you get.
Yeah, I would say so. I feel like because the ownership aspect in crypto is a lot different, where you can be a part of a DAO. Like a lot of these companies will use I think they kind of work around that security aspect of becoming a security by being a DAO, like Uniswap, where if you own Uniswap tokens, you can help, you can go and jump in there and be as much involved as you want, like in that community, where you don't have communities built around stocks in companies
Right.
that
can leverage themselves against the
Right.
organization itself,
Mm-hmm.
which is a big benefit to crypto.
Mm-hmm.
And I don't want to dive deep because this is another topic we're going to talk about, which is really explaining what DAOs are and how they work. But we've all done it. You've sat down at a restaurant or someone's got an idea at a market and you're like, man, I'd love to invest in what you do. Like, I think you got something.
Mm-hmm. Yeah.
But it's a small mom and pop organization that has very shallow walls built around it. They kind of keep it in that mom and pop box.
Mm-hmm.
Where crypto is different than a stock, it's very easy for crypto to empower small business to create a DAO around themselves
Mm-hmm.
to help take that next step to invest in infrastructure and grow their business into something bigger and better, because it's easy to set up the what would be the stockholder token holder exchange or the system where they can benefit and be a part of. I don't think you should. Let's just say they make a button that you put on your shirt,
Mm-hmm.
and it's a dog button, and then you invest your money in it. I invest my money in it. 100 other people locally invest. Say, hey, you guys are great people. You got a good thing going here. I think this button would be great worldwide.
Mm-hmm.
And then they go out and that ownership group now, the original owners say, well, we're going to make we make dog buttons, but now we're going to make cactus buttons.
Mm-hmm.
Well, as a DAO, you can vote. They would have to vote on that if it's set up a certain way.
Mm-hmm.
And say, you know what, you guys are doing great making money selling dog buttons. We're not going to approve making cactus buttons. That makes no sense. And that's the difference in investing in small business and how crypto creates a stock exchange for small business that you can feel safe investing in your local community, helping that one store that might be struggling. We have a small deli here that is a breakfast lunch deli. Man, they struggle because we're by the beach, we're a tourist town, and they're a little too far from the beach to get the year-round traffic, and it's they're great people and they can't afford to replace their HVAC. This is something that they could create a loyalty club and raise the money that they need to fix their HVAC and reward the local community for supporting them. Yeah, sorry, that's my soapbox.
No, I mean, that's one of I think the things that excites me most about crypto blockchain in general, and that it's just one of those things that we haven't quite gotten there yet. I'm looking forward to that conversation. Yeah, because
but once again, it creates a stock exchange that can be as local as you want or as large as you want,
right?
And it operates very similar to the stock market, but without the regulation. At the moment, without crazy regulation. The liquidity is something to think about. Volatility, once again, is there, but your participation, I think, is a bigger thing. I would love to invest in the stock market with certain companies if I had a better way to feel like I was a part of it, not just I'm throwing money at it until someone, comes in and buys it out and evolves from there. So,
yeah. So one of the last things that we should touch on is complexity and accessibility within those markets. Like stocks, it's very easy to go and get on Robinhood and buy stocks. With crypto, it's very complex. It's still you kind of have to have at least a basic understanding of
a little bit of patience.
Yeah, and you got to do some research. Like as far as like what is a decentralized exchange? Why should I have my own wallet, and why should I not have my money in a centralized exchange like FTX? Like that's a perfect example of, a lot of people had their money in FTX and lost it all because they didn't own their wallet. They didn't own their keys. That's a big saying in crypto is not your keys, not your coins. And that's why. So it's very important to understand why you need your own digital wallet and why you should probably stick to decentralized exchanges. I think using centralized exchanges is good. It has a lot lower fees, but don't put all your money in a centralized exchange. Spread it around. Yeah.
Most people, you reach a certain point where you have, especially if you own a business, you don't keep all your money in one bank.
Mm-hmm.
You don't keep it in one account even. And most people, when they reach a certain point in their life, they're investing, they're putting money away. It's not in the same bank. You spread it around for reasons,
right?
For good reasons.
Yep. That's it. Well, don't keep all your eggs in one basket.
Yeah, I think we kind of scratched on the surface of a couple topics we're going to expand on. And this one, we've just really touched the surface. You can go really deep into breaking down what crypto and stocks are. We just tried to really paint a quick picture. So if you're trying to figure out how to get into this, the barrier's a little lower. It's, you got the basics. It's not much different than the stock exchange, but like Seth said, there's a barrier to set this up. It's not as easy as going into Robinhood and 5 minutes later you've got an account open. It can be, but there's a lot of different, there's different exchanges. You have to have a certain exchange for certain coins. If you're really digging down the rabbit hole, you have to know where to find these things to invest in or where to buy these tokens. And then the NFT market's a whole other thing. So we're going to elaborate on this. We're going to do a how to open a wallet segment. We're going to really start expanding our website, which is non-existent at the moment. We have started working on it. So you guys can not just watch here, but you can follow up and get the resources that we're trying to give you to help you get into this. Our goal here is to do kind of what we just talked about, be able to take the community aspect of what crypto is and blockchain technology is and help inspire, from my end, small business to utilize this on a local level, because it is empowering for small business. It's empowering for regional communities and big and small. It can scale to a Girl Scout troop all the way up to Fortune 500 company. It really is that powerful and that accessible to everybody. So we're going to start breaking these down. Help you guys understand what a DAO is, what a community actually is, what you can do with these things, what regulations are coming up, what regulations are kind of in place. There's a lot here, guys. But I think for now,
that's it.
We're good. Yeah. So I'm Jim and Seth, and no catchphrase. See you.
Thanks.